Afternoon, everyone. I apologize. We're running a couple of minutes late. We're on the floor a little longer today than we anticipated, but we're going to get going here. There's a sign-up sheet up front if anyone would like to speak today for the bill that's on our agenda. Please feel free to sign up. All right. Chairman Summers is in a House committee meeting presenting a bill, so I'm going to pinch hit for him as vice chair, and we're going to go ahead and get started. We've got a hearing only of HB 531 today, hearing only of HB 531. Representative Barrett, if you would come forward. And you may present at the table in front or at the podium, your choice, whatever you prefer. Sure, that'll be fine. Yes, sir, that'll be fine. All right. All right, well, good afternoon. Welcome. Glad to have you, and your witness mic number 2. I will open the floor to you, Representative.
Well, thank you, Mr. Chairman.
If you would pull the mic closer to you, please, so that folks in the back can hear. Thanks.
Great. Thank you, Mr. Chairman, and ladies and gentlemen. We're delighted to be here today. I'd like to introduce an associate, Laura Glenn,
Welcome.
Public Trust Advisors. Laura, would you introduce yourself?
Sure. If you can hear.
Yes. Let me turn your mic on. Okay, go ahead.
Okay, and apologies. Went out west skiing and came home with no voice, so I don't know how that works. But anyway, thank you very much. My name is Laura Glenn. I spent 24 years across the street working for the Office of State Treasurer, and now I'm with a firm called Public Trust Advisors that manages public fund money in the public fund space around the country.
Okay, great. Welcome.
Thank you.
Well, so, Mr. Chairman, this bill, House Bill 531, the origin of this bill and sort of the evolution of this bill is kind of interesting and timely, especially in lieu of some of the headlines we've all read and heard about this week with bank failures and things like that. The origin of this bill was originally sort of to look at the available investments that local governments could make and to sort of more nearly align those with what the state government and state agencies can invest in. That was the origin of this. But the idea was that if we're going, there was a real goal there, which was, if we allow you to do this, we're going to want to make sure that there are certain requirements of you as a local government. We've got all of this public money out there that it doesn't necessarily, and you've got a wide range of skills and experience from people managing this money with 159 counties and over 500 cities in the state. You've got a really broad array of talent and experience out there managing public funds. And as Senator Hodges would attest, in banking, we are regulated and examined ad infinitum, and I know that you know that as well, Mr. Chairman. Everything from the type of loans we're making to the types of investments we're making and the policies we have in place, and are they good policies, and are we adhering to those? And it's fascinating, and even with that kind of oversight, you still hear stories like the one that happened of the 2 banks that failed in the last week. That being said, we've got such a wide array of investments, talent, and skills out there around the state, and I thought there's really just not that much oversight. And some of these municipalities have a well-honed investment team, a CFO that is very experienced. He knows what he's doing. He's been trained like crazy. He's got a well-defined investment policy, and he's got great oversight and transparency. And you can go on certain websites across the state, and you can say, well, these guys really get it. There's their policy. This is what they're investing in, and they're all over it. And then you see others that are sort of a little loosey-goosey. And so as this thing sort of evolved, we kind of said it's time to really ramp up the investment policy, the continuing education, the transparency, the reporting component of it, and so where it started out as let's look at the investments available, because frankly, there was doing nothing is a risk as well. There's a risk of losses from bad management. There's also a risk by doing nothing in a dramatic inflationary environment. Earning yields of next to nothing, you're losing even if you feel like you're not losing. It certainly grabs headlines when you lose 10% on an investment. But if you're losing 8% or 10% a year to inflation, that's losing too. It just is not quite as obvious and direct. I bring this little funny prop. I keep it everywhere I go. This little dragon is made out of Venezuelan currency. The paper is worth more than the currency. And that speaks volumes about what happens when governments run amok and people don't pay attention to things like spending $500 billion in November in the federal government and taking in $250 billion. And you think that's a formula for disaster. But we are in a dramatic inflationary environment. And I think that anyone who manages money should be looking at potential yield as well. But always preservation of capital comes first. So what we've done is this bill has evolved. We started with one thing, and it kind of evolved into something even more important. And then the irony of these bank closures last week only puts an exclamation point on how important this really is, that we do something. Doing nothing, to me, is a formula for disaster for our state. We should have some stronger guidelines. We should have some oversight. We should have some continuing education in our state for these local governments. And as opposed to just sort of squishy, we hope you will, we ought to be a little more urgent about that. And so this bill is, and the reason we're glad this is a hearing and not a vote today, this bill was passed unanimously in the Banking Committee in the House. It was passed overwhelmingly on the House floor. That being said, we recognize the possibility of enhancing this, but we don't want to just wait and do nothing. So we've tried to collaborate closely with the Georgia Bankers Association. I've been talking to Mr. McCoy, the state treasurer, a fair amount. We've had multiple meetings and conversations, and I think we're of like mind that we want to make some improvements. If the treasurer's office is, through the Georgia Fund One, if we have 600 plus local governments investing through Georgia Fund One, there's probably some opportunities to sort of go a little deeper with those entities to say, let's talk about your investment policy. Let's take a look at it. Let's help you get a really great investment policy. Let's look at possibly doing some continuing education through maybe Carl Vinson or GGFOA or whatever, to create the right training. And Senator Hodges and I were talking a little bit yesterday about that.
Representative Baird, excuse me, forgive me for interrupting you. Let me make sure we're all on the same page, though. So what bill number are you operating from? Let me tell you, we have in our folders LC 500575ERS.
Yes, sir. That is
Okay.
a substitute.
Well, and that's my point, and why I'm understand, because I understand that what's in our folder is different from what passed the House as HB 531. Is that correct?
Yes, in fact,
Okay.
this.
So what are you speaking to the bill that, because you just said this bill passed the House, and so I want to make sure we're on the same wavelength. Are you speaking to the bill that passed the House, or are you speaking to the bill, the substitute that's in our folders?
I should be speaking to the bill that passed the House. What I did is brought a substitute that tries to improve on the bill that passed the House, and I realized the error of my ways there, because this is the first time I've done this. So apologies for that, but
That's okay. I really want us to make sure we're all on the same wavelength with you and know what we're looking at, and we know what you're speaking to.
Okay.
So, and it's your choice, quite frankly, I guess. But one more time, are you speaking to the substitute?
I am speaking to the substitute.
Okay, all right. So is the committee clear on that? Okay, all right, go ahead.
So that being said, I think that kind of gives an overview of what we're trying to do. The bill specifically, I'll defer to Laura Glenn if that's okay, because
Sure.
she can make things a little more compact than I seem to be able to.
Okay. That's all right. Ms. Glenn, glad to have you with us. I'm going to turn your mic on, and you have the floor.
Thank you. So just to kind of go back to the bill that passed out of the House, I will say Carter became very passionate about what was in this bill and doing some research on his own, looking at other local governments in Georgia, what they're doing and what they currently have on their website in regards to policy or in regards to their investments in their ACFR or CAFRs. So a lot of collaboration happened after the House, working with the state treasurer, working with GBA, with others that were concerned about the bill, really tightening it up even more so. So we can kind of talk about the bill in general, if you like. So just, I think the most important thing out of the bill, I've made notes and I'm going to go away from them, so I'm better on the fly. The most important thing I think that's coming out of this is Georgia lacks education and training compared to other states around the country. For example, Texas requires 8 hours of continuing education every year, training to hold the office of finance director. So there's a lot of, unfortunately, if you talk to any finance directors around the state, they would tell you they are overworked because they wear about 20 different hats. So investment sits to the side of that job for them. And so they have a great option, which has performed very well in the last 2 years, Georgia Fund 1. But to Carter's point.
You have to say representative.
Oh, sorry. Representative, sorry. Okay, thank you. To Representative's point, they tend to put money only in Georgia Fund 1 and don't look at their cash flows. So the start of this would be setting up an investment policy for a lot of local governments. Sitting down with them, talking about, hey, the first thing that you ever do when you manage money for folks is you talk about their cash flow, right? And then their risk tolerance. How comfortable are you with what you have under your jurisdiction? There's going to be some people, some large cities, counties that are flush with cash. And so they're tending to keep it very short-term in nature and when they should be having it longer term. So really kind of working with them cash flow. What do you need out for 6 months to a year? What do you need out longer term in terms of what could you invest? For the first time in a really long time, we have rates at 4, above 4%, 5%. They sat at 0 for a really long time. So interest income is becoming meaningful to a lot of local governments here. And for the smaller ones, it's far more important than the larger ones because they actually operate off the income. So, talking to them about setting up a true investment portfolio, like having something in cash, having something longer term. And then through that, you work through the policy. You take the code, whatever enacted, and you make sure that the policy reflects, first and foremost, the objectives of a good investment program, which is what Representative said was safety of principal, liquidity, income, and then diversification. And that's where I think this banking, what happened, the banking crisis, I think that's shined the light on diversification bigger than any of them because so many folks had all their money in one bank, right? And banks are great. I mean, I'm all for the banks, and we, are definitely supportive of all the banks here in this state. But making sure that you have money in different pockets that you can get to. So talking about transparency as well, letting your taxpayers know where your money is invested. So that when something comes, if something goes bump in the night, someone can go straight to your website and go, oh, I feel great. They don't own Signature Bank. That's wonderful. So having that public dissemination of information. So those are the first two really critical components of setting up the investment policy. And then making sure that the policy outlines what securities they can do, out to what. And in addition to a maturity structure, right now there's no maturity structure. They could go buy a 10-year treasury if they wanted to. So putting some parameters around what's actually already in the code. So this new substitute bill, along with the other bill, basically tightened up the credit standards, said you can't just buy a municipal. You have to have a municipal that's AA or higher. And that's putting guardrails around the securities they're already allowed to do. So in other words, making sure that you're not buying something that if it got downgraded tomorrow would have to be sold simply because it fell out of compliance with the code. So making sure that you tighten up those standards to prevent issues from happening. And I think the most important thing is really working on education, is setting up some type of training when you come into the office. This is what you need to know about investments. Sitting down and making sure your staff understands. Because you'll see finance directors move from one city or county to another. So when they move, it's great because they take all that education with them because they seem to keep getting bigger and bigger. But keeping them educated and making sure that the people, especially we have an aging workforce, right? Making sure the younger generation that comes behind believes in preservation of principle and understands the investments that are inside this code. I'm gonna take a water break. You want to talk?
Okay.
Oh, sorry, taking a water break, but is anybody?
All right.
I can talk a lot.
Take a couple more minutes, and then
Okay.
I'd like to open it up for questions
Sure.
from the committee.
And
And then
then-
we've got a few people signed up I want to get to.
Okay, and then the remaining, portion of the bill talks about the additional investment options, including, right now, the only cash investment option for a lot of locals here in Georgia is either deposits at the bank or Georgia Fund One. So all the bill is doing is adding some existing investment types, as well as allowing for additional investment pools or money market funds to come into the space so that you don't have somebody, for example, the likes of like a city of Savannah, they have all 500 million or even up to $1 billion at times all in one pool. So this is where I was talking about diversification, making sure that they have a pocket of money here, a pocket of money there, a pocket of money there. Because even in this day and age, you could have a simple cyber attack that would shut down a fund and where they wouldn't be able to get access to that cash. So allowing them to participate in a lot of the other options that the state can as well. And that's kind of mirroring the local code to the state code. So I will
Okay.
turn it over. Sorry.
All right. No.
And my apologies I didn't mean to disrespect the representative, so my apologies. Or you. Yes, I'm very sorry.
That's fine. You're fine, Ms. Glenn. Thank you, though. Thank you. All right. Questions from the committee for either Ms. Glenn or Representative Barrett? All right. Senator number 4. Your mic is on. Senator
Thank you.
Halpern, thank you.
Just following along and want to make sure that I didn't miss anything. So the bill that's in front of us is not the one that passed by the House, but it is a substitute based on conversations that you've had and massages you've tried to make, incorporating feedback from the treasurer and the Georgia Bankers Association. Is that right?
Absolutely correct.
Okay, so then follow-up question, if I may. So what I don't think I heard is principally, what are the differences then in this bill and the one that passed out of the House? What are some of those changes that you incorporated now that were not in the House bill?
So an obvious example, and this can use some additional refining, and the conversations are continuing. But an obvious one, negotiable CDs was taken out. So a bank can invest in, a local government go down the street to their local banker in the community and shop around town and see who's got a better CD rate, for example. That's a non-negotiable CD. A negotiable CD is something you go buy through your broker, and it's not a collateralized deposit. And it would have the potential to siphon deposits out of the state of Georgia and into a bank that's not in Georgia. And so we stripped that out after speaking with Joe Brandon and his team at Georgia Bankers Association. So that's a good example. We have government money markets that was in the bill that we did approve that I spoke to with Mr. McCoy, and he said, yeah, that one works for me. And we're probably 90% there, but there's some things in here I still don't like. So the substitute bill was really designed to tighten up, to put more credit parameters in. So, for example, that you'll see AAA ratings required on certain investment things that weren't in the original bill. So it was purely to make it more conservative, to tighten it up. There's nothing broader or more liberal. It's all designed to be more conservative. And we're probably well down the path, but we're probably not fully baked yet. But I do feel like, I thought, well, I guess I can just relax and this thing can just wait until next year. But in lieu of the things we saw this past week, I thought this should be kind of urgent. There's a lot that we can be doing in the off season between sessions that should be done instead of just sort of kicking the can down the road for another year.
Okay. Very good. Thank you, Representative Barrett. Any other questions from the committee? Yes, sir. 11. All right. Yes, sir, you're live.
Thank you, Mr. Chairman. Just a couple of questions. And, I know that during COVID, there were there was a lot of growth in municipal funds. And do you have any information, and I'm getting toward the need, where I'm going with this is the need for what you're talking about. So for a while, municipal entities had lots of surplus money in their accounts that they needed to do something with. Where are they now? Where are muni funds in Georgia? And this may be a question perhaps for GBA folks, but so do we still have those large numbers of balances on the muni balance sheets? Okay, that's
That's a great question, Senator, and probably a good question for Joe Brand at GBA,
Okay.
but also probably a great question for the treasurer.
And I'll throw some other, these are just questions, okay? All right, that's the first one. The second one is municipal deposits in Georgia are basically safe. They're basically, on the large part, they're collateralized. I know that if I take a muni deposit, I have to collateralize it with my bank's bond portfolio. So if my bank fails, the municipality has first call on those securities. Okay, all right. So if is that, I guess my question would be, what percentage of municipal deposits in Georgia are collateralized and are relatively safe, okay? And then, so that leads me to my third question is, if, depending on the answers to the first two, what are we trying to accomplish? If we don't have a big surplus of muni deposits, I mean, most municipalities, they have some extra money, but they don't have a lot of extra money. Their taxpayers won't let them do that. So what are we trying to accomplish? Are we trying to make muni deposits safer? And if they're, safe right now, are we trying to make them even safer? Are we trying to educate local officials about proper handling of their deposits? Or are we trying to chase more return for them? And if so, are we just trying to sell something? So those are my basic questions, which I'm not asking for an answer right now. This process of looking at this bill, I think we should get answers to these questions. Okay.
Thank you, Senator. All very good questions and all on point. Representative Barrett, if you'd like to address any of those from the policy objectives of the bill, take a moment or two. I know that Joe Brandon is signed up on the sign-up sheet, and he'll be speaking to us later, and I know he can speak to some of the questions about municipal deposits and how they're handled and how that has changed over the last couple of 2 or 3 years. But if you have an answer to the policy objectives of the bill, take a moment and address those if you would like to.
So my background, I'm a 35-year banker who started, I was the founder and CEO of a bank in Forsyth County in North Atlanta called Community Business Bank. And I was proud, one thing I'm most proud of is that in the time that we were open, they closed 89 banks in the state of Georgia. We were referred to by the Wall Street Journal as the Chernobyl of banking. And one thing that people used, a metric that people used to talk about the soundness of banks back then especially, was a Texas ratio. It's a ratio of your non-performing assets relative to your capital and your loan loss reserve. A higher Texas ratio is a very bad thing. A lower Texas ratio is a better thing. We had a Texas ratio of 0 every quarter for 7 years. I'm a very risk-averse person. 35 years of banking, it's danger. What can go wrong? And which is an interesting dilemma because things happen pretty fast here, and I'm a plotter. And it's like, all right, what are we missing? So above all else, I looked at this and thought, there's just something a little out of whack. And we all remember reading about Birmingham and was it Alabama? And we've all heard about Orange County. And I'm like, I'm actually kind of surprised that we haven't had our own version of that. And I think we will. Talking about collateralized deposits and talking about the safety of deposits. Silicon Valley Bank, their bond portfolio is what was a big contributing factor, and a lot of things that they were invested in were solid gold, but they had interest rate risk. They were taking short-term deposits, investing longer term, and then had to unwind their bond portfolio and took big losses, almost $2 billion in losses, right? And something that most people would look at and say, that's a very safe investment, and yet it creamed them because of the interest rate exposure, because they went longer on treasuries than they probably should have in a rising interest rate environment. As rates go up, the value of their bonds come down, and then when they had a little bit of a liquidity issue and had to sell some of their bond portfolio, they had losses. So things that should be seemingly safe, treasury bills, you can't get any better than treasuries, right, Mike? Senator Hodges? And yet there was a problem. And we have very much that potential right here in our state. So above all else, safety and soundness first. Yield's important too, way on the back end. Soundness first, maintaining adequate liquidity, making sure that people are well enough trained and educated to know what those things mean in managing their cash flow. And then return's important too, because doing nothing can mean in an inflationary environment, you don't want to just sit there with your money sitting in a checking account too long, or you're still going to have losses in the form of your purchasing power. So it all kind of goes in the stew.
Okay. All right. Representative Barrett, thank you for that. If we could now, I'm going to move on and let's hear from some of the folks that have signed up to speak. Steve McCoy, Mr. Treasurer, would you?
Thank you, sir. Some points that the chairman asked me to prepare some talking points.
Yes, sir. Thank you.
Thank you.
Yes, sir. Mr. McCoy, you have the floor.
Okay. I think the objectives and goals.
If you would, please pull the microphone closer to you, and that way the folks in the background
Okay.
can hear you. Thank you.
I think that Representative Barrett's objectives are excellent. His goals and purposes are extremely good. I think this bill, though, has been crafted in a way that it does have problems. We did not see the bill until it was had already cleared the House Banking Committee and it's had in the rules. We did not have a chance to add comments then, only after it had passed the House. And after it passed the House, we did raise issues that are some serious issues in it, and many of those were addressed. We did not see this bill after we had given comments until about an hour and a half ago, 2.5 hours, maybe 2 hours ago. The goals and objectives are very good. And it just reminds me of, and I've been around for a while, is that an economist that used to even advise Milt Friedman, he'd say when a policy is adopted, it should take into account all parties affected over an extended period of time. And that's something I remember. All parties affected over an extended period of time, not just a handful now that we're experiencing something, and then but open it up to problems that it may create later. What I've seen here is, and all the training, both Silicon Valley Bank and Signature Bank had MBAs, CFAs. They had excellent trained people and educated. That's not what protected them. And that's an important first step. But that's not, that would not have prevented those banks from failing. On the back of this fund, you can actually see where some large local government investment pools have failed over the years. State of Florida, very well managed state, it dropped the ball and did not have the controls in place when the downturn hit in the Great Recession. And what triggered theirs was not investment education. They had very talented people run them. What happened is that when rumor got out that they had some, I think it was about $45 million of securities that were backed by subprime. They were rated AAA, but backed by subprime mortgages. Some of the local governments, they had lots of local government investment pools available in Florida, so they started pulling their money out of that pool. And when they started pulling their money out, it was about $12 billion, I think, in a month. And the governor, the attorney general, and the treasurer all had to step in, and they closed down that fund and locked down the rest of the funds until they could come up with a plan to free it back up. These are serious. Anytime you set up a local government investment pool, it's extremely serious because they're not regulated by the SEC. They're regulated by whoever establishes them. state of Georgia, we have one that's been in operation since 1982. Never had a problem with it. It does very well. This brochure shows you that we actually have a risk tool that we put on our website every week, and that we go over with the government for the Office of Planning and Budget, with the Director of Office of Planning and Budget every month, and report to the Depository Board every quarter and meet with them. And we monitor every aspect of running a pool. Running a pool is not just the investments themselves. That's a very important part. And the qualified, but it's actually the operational risk. And operational risks are extremely important. And if you even look at things like, I know that Ms. Glenn, and she was an excellent employee of ours for years, she mentioned risk there on cyber insurance. We do have cyber insurance. We do have fraud insurance, errors and omission insurance, and we stress test each of the portfolios. We actually set up a reserve. The legislature authorized that a few years ago to set these up in a trust. So we have capital. In the event we have an insurance claim, we can cover the deductible. We can actually purchase in an impaired security. We can address it, because if you have a local government investment pool, that you do need to have some way to support that. If there is an error, we actually had one time State Street Bank made an error, and we knew it was an error. They disagreed. We had to use our reserve. We supported I think it was Georgia Ports Authority, I believe was the one who made the withdrawal. They were whole. It took us 6 months to work it out with State Street. They finally admitted it was their error. They reimbursed us. But you do have operational issues that can happen. And if you have one that just is operating, but there's no organization that's behind it, then the problem is if there's an error, it can even trigger a run. So runs are the most dangerous thing for a local government investment pool. And they're also what happened to this week that with the banks. That what happens on that is that with a financial institution, is that it's usually not capital that caused the problem, it's liquidity. And there it was liquidity. They had a very good investment portfolio. They did a bad job of matching against their liabilities, but when the rumors hit, the big funds started flowing out, and they could not sell those at the price they thought they could, and they ended up having to close the bank. That can happen with counterparties as well. And so what I looked at is, and I look at things, I have to say, sometimes very skeptically, because I was trained to look at risk, and look at risk first. And I was an investment banker for years, and that's what I always focused on. I had to first, to get a transaction approved by our commitment committee, I had to explain to them the 3 reasons that we should not do the deal. I was at Lehman Brothers years before Lehman ended up running their problems. And I had to go through why not do it. And then if I did not demonstrate those, and they had their credit officers had already scrutinized everything, and they came up with theirs, that then what would happen is they would send you packing and tell your client, we're not going to issue these bonds for you. Here I did look at it for risk. And so, and with that, I did point out the negotiable CDs, and Representative Barrett addressed that very well. Another risk I see here are these, it establishes local government investment pools, an infinite number of them, with no oversight, and that it actually, from what I can tell, and again, I'm not an attorney, on page 3 of this new markup, any school district, any charter school, I believe, any public library could open up a local government investment pool and hire a firm, like Ms. Lynn's firm, to manage it, and they can market it to anybody in the state, and it's a legal investment for every city, county, and school district and authority. You can have 10 or 20 of those. There's no limit. And they could, whoever chases the yield, Senator Hodges, you mentioned chasing yield. It opens it up for that opportunity where you could create a run on one, chasing yields on the other. But it really is something that is not good public policy. It needs to be focused on very carefully. And so to have it, another is that we're in an era and things are changing pretty rapidly. And y'all are probably dealing with some things that'll come up that, like ESG. We stay out of policy issues, but if it's something that crosses over that could impact the investments and the quality of the investments and the security of the investments and liquidity, then we would weigh in. And for instance, that is something that, and I'll pass these out at as I leave, but that is something that even one of these managers that is working with, has proposed, and they've been working on this bill with Representative Barrett, is that that's something that they have a lot of material on, yeah, and that they actually implement. The problem that we have is that if you had one local government decide that that was the most important thing to them, instead of having something that's safe and secure and liquid for others, then that will impact if that's part of their goals and objectives. I picked that up by just looking at the language, and instead of seeing 3 bids for securities, it said you would attempt to have offers, and then you could take the one deemed best. Anytime you use the word deemed best, it set off a little red flag. And I thought, what does that mean? And it means that you could have social policies embedded in to your investment policy by the board, whoever set it up, or the manager themselves. Other issues that are kind of, I found in there that I don't think were intentional, were that even though the intent was made to remove negotiable CDs, they're actually still in there. And the problem, though, is that when I brought this up to Representative Barrett and Mr. Brannon's attention to start with, is that negotiable CDs are not seen that much in Georgia. From the banker side, they don't usually see them that much. What you see it from is the institutional investor side. And they began back in 1961 with Walt Wriston, who was the chairman of the predecessor to Citibank. And he wanted a way to raise more capital, more funds than through commercial paper. And he ended up coming up with the idea, and they got it approved, and they were the first issuer. And what you do is a bank sells an issue to a broker-dealer, and it's theirs from there on. They make the market in and sell them. They're not collateralized. Well, what happened after what's happened with silver, and so what you guys, if you look at the language here, obligations of domestic corporations, including notes, bonds, and other marketable securities rated A or higher, those negotiable CDs are marketable securities issued by, even this week, Signature Bank, and they were rated A. If they had any, they had debt out. I don't know if they had any negotiable CDs. So we called our outside manager that we do use on products that we do not have the skill set or the research staff to monitor. We use another firm, Invesco. And I read this language to them. They came in and said, yeah, we could buy negotiable CDs for that language. So we're told it was taken out, but it's still in. And those are the things that, so I really look at it. Another is it has municipals that are rated at the time of purchase. It doesn't mention 3 bids. The problem there is private placements, and we have encountered a situation only once, actually 2 times, but once that was not as pleasant, where we had an entity that bought their own backdoor way debt issue for an authority, and so they were actually buying their own debt. You want to watch for things. Again, I watch for problems, but there are issues like that I really think. Another is
Mr. McCoy, actually, we're going to need
Okay.
yeah, thank you, and I appreciate your comments, but I
Okay.
want to have time for any questions that the committee members may have. We've got a few other people that want to speak
Sure.
as well. Any questions from the committee? Okay. Mr. McCoy, thank you for being
Thank you,
here.
sir.
I appreciate your work, and I appreciate you being in front of us today. Ed Lindsay.
Thank you, sir.
Good afternoon, Mr. Chairman.
Good afternoon. Let me get your microphone on. Let's see here. Okay.
I'm going to let the experts, financial experts, talk about the merits of the bill in terms of the details contained in it, but I represent an entity called PFM Financial Advisors who advise portfolios, particularly public entities portfolios around the country, and have worked on this bill. And I just want to give the committee a little bit of background while you consider the merits of the bill. And like I said, Representative Barrett and as well as the other financial experts can sort of talk to the overall merits of the bill. But just want to sort of tell you what we've been doing over the last year. We did meet. My client came to us about a year ago, wanting to look at ways in which we could bring Georgia in line with every other state, and well, not every other state, but most other states in the country in terms of what they allow their local governments to invest in. And we looked at several other entities around the country, including Texas and Florida and multiple other states. And we put together a memo, and we presented that to the state treasurer about a year ago. We met with them about a year ago on that. We then asked Representative Williamson to drop a bill at the end of last session, simply as to sort of start the discussion with no intent of that bill ever passing. And then we spent the last year, Mr. Chairman, quite frankly, sitting down with just about any group that may be impacted by this legislation in the state of Georgia. We met with the Georgia Municipal Association, and we took in what their concerns were, and we made adjustments according to their concerns. We sat down with ACCG, and listened to any concerns that they may have or any tweaks that they may have, and we incorporated those into the bill, a proposed bill. We sat down with the Georgia Bankers Association and had a very good conversation with them, and I appreciate the folks from the Georgia Bankers Association here today, as well as the other folks that are here today. And anytime, and sort of looked at any thoughts that they may have and tweaked the bill according to their. We also talked to several other entities as well and listened to their concerns. We met with the state treasurer last week, and he raised, I believe, one concern in particular. He had general concerns, but one thought in particular regarding the CDs issue, and we tried to incorporate that as well. So this process is not something that's being attempted to be rushed through. This has been a very deliberative process over the course of the last year, in which my client as well as other entities have been trying to work on a bill that would give local governments an ability to get an adequate return on their investments, and at the same time spread out their investments so that they're not too centered on one sort of investment or the other, and get a market return on their investments like other entities around the country have been able to do. That's simply what I wanted to sort of present you with, and I'll now turn it back over to the experts on that. I just want to sort of let you know that all the steps that we have taken in order to try to answer the various concerns over the course of the last year.
Thank you, Mr. Lindsay. That's helpful to have that background.
Thank you, sir.
Any questions for Mr. Lindsay? Okay. All right. From the committee, I should have said. All right.
Thank you.
Thank you, Ed. Katie Sharp.
Hi, everybody. My name is Katie Sharp. I represent myself today. I have a strategies group called Sharp Strategies. I also run a private equity firm called Spade Capital, which I own 100% of. And I had the pleasure of meeting Representative, was it last year? Yes, last year. And him and I got to talking, and he's actually one of the reasons that I started my private equity company. And I just want to be clear, I'm not a lawyer, nor do I have an MBA. I'm an entrepreneur and a small business owner. I have 5 companies in my portfolio that are all my family's businesses that I've either been an officer of or I'm now president of since I was 18. So I also grew up here in Georgia for the last 13 years. I live in Buckhead, and I grew up under D.L. Riley Reed. And that public-private partnership, I think, is a great precedent for where our state is today. I think our governor has done a great job of continuing that, as have both houses in our legislature. I'd like to address some of the points that our treasurer made to just clarify a couple things and make sure I understand your concerns. The first thing I would like to say is an accredited investor. Does anybody know what that definition is? Or does anybody want to speak to it? There's a threshold that the FEC and the SEC says, and it changes every couple of years. The economic J curve used to be 7 years. It's now 3 to 4. I believe it's at 250 million now. Is that correct, Mr. Treasurer?
Actually, excuse me, if you would just address
Yeah, just present
the
it.
committee.
Okay.
Just
I'm
present the
sorry.
committee
I just
because
knew he would have the answer.
Well, part of the problem is that we're live streaming this, and folks need to be at a microphone so that folks outside and watching online can see and hear.
Yes,
So if you
sir.
would just direct your comments, and let's not ask questions, if you would, please.
Oh, okay.
Okay, thank you. That's okay.
Apologies, Mr. Chairman.
No problem.
Well, an accredited investor, I believe, it has to be 250 million. And then also the SEC threshold for private equity is 150 million. So if you are below that threshold, then you are not SEC regulated, which if anybody looks at our local governments and our cities, while they have a lot of money, I don't know that they might hit that threshold anytime soon. And I think that we elect locally the people that care about their towns and their cities and their governments. And I think they know what's best for them. So I'm for this bill. And anything you'd like to ask me, please let me know.
Okay, great, thank you. Any questions from the committee? Don't see any questions, so thank you, Ms. Sharp. Thank you for being here.
Appreciate you.
Yes. Joe Brannon, your name has been invoked previously today. If you'd care to defend yourself.
I feel like I've been subpoenaed.
You have the microphone.
Mr. Chairman, I'm Joe Brannon with the Georgia Bankers Association. We represent virtually every bank in the state, from the smallest to regional banks to the largest in the world who are our members. This is my 43rd legislative session representing the banking industry in Georgia, so seen a lot. I haven't seen this, but I've seen a lot. But I do want to, I'm going to talk very briefly. Chairman Cardin actually asked me to speak, so I'm doing this. I want to thank Representative Barrett for reaching out very early in this process, and we've had some really good conversations. Treasurer McCoy as well. We've been in joint meetings together. Also, Ed Lindsay, Ed, thank you so much for including us with your client, who is actually an associate member of ours, PFM Asset Management, this actually owned by U.S. Bank. Also, Jay Morgan, whose name has not been invoked. Jay's client, Public Trust Advisors, and Laura Glenn have been very helpful in meeting with us to answer questions. We had two concerns with the bill. One has already been mentioned, and that's the issue related to negotiable CDs. That's something that we were more concerned from the world that we are in, and that's pledging securities against public deposits. A regular CD that somebody would get with us would be collateralized. A negotiable CD is not collateralizable, if that's even a word. So we felt it would confuse the buyers of that, it would confuse the bankers, and so we asked that be removed. The specific language is removed. Treasurer McCoy raised some other issues. The other concern we had was related to the single bank collateralization pool. In Georgia, there are four methods that the banks use to collateralize public deposits. This was just an inadvertent omission from the bill, that the single bank pool was omitted. Both of those have been added back to the bill, so thank you for the single bank pool has been added, the negotiable CD language has been removed. There were some questions about the pools, and let me just give you the numbers. These are January numbers. The February numbers will be posted after business hours tonight. In the what's called the multi-bank pledging pool, Senator Kennedy was the author of that legislation, probably much to your chagrin, because you worked, I think, hundreds of hours to perfect this bill. And this was in 2016. There are currently 45 banks in Georgia that are participating in that pool. 13 of them are what are called mandatory banks. That means that they have total assets, this is nationwide assets, not just in Georgia, of $40 billion or more. So 13 are mandatory participants. And in your wisdom, you gave our community banks the option to join the pool if they chose to, and we have 32 of our community banks in the pool. There are 3,083 public depositors that are covered by the pool, and the total as of January 31st in the pool was $24.2 billion. That's fully backed by the pool. There's the other pool that I mentioned, the single bank pool that was added back to the legislation. There are 8 banks that are participating in that, $387 million of public deposits for 140 depositors. So that's a little bit about the collateralization, and that's the world that we come from. We come from that world. Chairman Summers asked us to speak based on what does this really mean to the individual local bank. Again, we come from the collateralization world. A public depositor comes to us and says, we have this deposit, what rate will you give us? And the banker gives a rate. They can look at Georgia Fund 1, and there'll be perhaps a different rate there, and it might be a higher rate. So the banker is given the option of, okay, I'll match that or do better than that because we want to keep that deposit. What this legislation does is creates a third option out there, private pools that'll be created, and if you go that route, the local banker will then have a third option to look at to match that deposit if they choose to keep it. So that's the only. We're not here for or against the bill. That's your wisdom to do that. But Chairman Summers asked us to tell you what we saw as the impact on that local bank. So we're neither for nor against it. We're here to provide any information we may. So thank you, Mr. Chairman.
Thank you, Mr. Brandon, for that institutional knowledge that you always bring to it, and I mean that. So any questions from the committee for Joe Brandon with the Georgia Bankers Association? Any questions? All right. Hearing none. Yes, sir. Thank you. Was there anyone else that signed up or thought you signed up to speak at our hearing today? That's all the names that I had. Okay. Yes. Final comments from the committee before we adjourn. Senator Hodges.
Thank you, Mr. Chairman. Excuse me. I, like the representative here, have been a banker for a number of years, and I just wanted to say that the author of this bill and the representative has a fine reputation as a seasoned executive in the banking business, a very successful banker, and an excellent risk manager. So I just wanted to throw that on the table.
Well, thank you, Senator. That is Representative Barrett. You've just received a ringing endorsement from someone who, in our organization, he brings the banking experience to the Senate chamber, among a few others, but no one with the years of experience that he has. So that's a great way to end this hearing for you, probably. But if you dare speak beyond that, I'll give you the mic if you want to say anything else, and happy to have you close out with any final comments. And I do want to say thank you for the presentation. Thanks for the people, to everyone that came so that we could have a hearing on this and get us thinking about this issue. But I will give you the last word. Yes, sir.
Thank you, Senator Hodges. I could, if I can go to heaven tomorrow, and I go happy on that. If someone on this committee had $10 million sitting there in your account, I want to make sure that the individual knows how to safely do something with that. I don't want to tell you, you don't know how to do that. You better let me do that for you. That would be a bizarre way to think. We do have I have tremendous regard for our state treasurer. He and I are kindred spirits when it comes to managing risk, and I just regard the conversation. I'm so grateful for the conversations we've had, and we've collaborated, and we'll collaborate some more to try and come up with exactly the right solutions. With regard to, we talked specifically a lot about one thing, local government investment pools, and I don't know if everyone knows what those are. Some people probably do, and some people probably don't, but it's basically a bunch of different governments come together, and their funds are commingled and managed for them. There was a long period of time when the returns were infinitesimal in those things. But that being said, the spirit of this is we are trying to make it tighter and make it better, but with the idea that we simply don't want to do nothing and then wait for a calamity and then say, gosh, we could have done something better. And it all comes back to making sure that the folks that we're supporting have great policies in place and helping them have those things. For example, in the local government investment pool, it's called Georgia Fund 1, and it's managed by the treasurer and his team, and very effectively. It does have a weighted average maturity of 23 days. One size doesn't necessarily fit all. A Gwinnett County that might have $200 million might be different than a Glasscock County with, who knows, 80,000. So a single fund with sort of, and the treasurer and I have talked about that and the possibility of them opening up additional funds. Many other states do have other funds. Whether or not we decide to only go with state funds, and maybe add to that basket of goods, that's a way to go, or possibly expanding the universe to other providers as well. There are some states that have, over 50 local government investment pools. We have tried in this bill to tighten up the language there. We put in AAA bond ratings from, Fitch or Standard & Poor's, for example, in those pools to help manage and mitigate that risk. So what you'll see in this bill as we go deeper into it, hopefully next time we visit, is those kind of parameters are established here. My only goal is that we in the spirit of doing what's right for the state, is that we continue to work closely. There seems to be a real sticking point with the local government investment pools, and I'll see if I can't find the right solution for everyone that works for everyone and doesn't create any real risk. I mean, risk first, right? And mitigating risk is above all. That's the whole point of this, right? Is to wring the risk out. And because there is some pretty obvious risk out there right now with a lack of oversight, a lack of training, a lack of consistency. And probably through the Treasurer's office, if we've got 600 different local governments investing in Georgia Fund One, that might be an opportunity in itself to say, let's take a look at your policy, how you're doing, how you're handling your investments. Do you have a formalized policy? Let's talk about reporting. Let's talk about oversight. All those things that could maybe help avert a potential problem. But I'm just so grateful to be here today, and for all of you, ladies and gentlemen, for allowing me to come in to at least begin the conversation with you. I do have a sense of urgency about us advancing the ball with great banking minds and great ideas to help move us forward and make our state a little bit safer for those people who are handling lots and lots of money with a wide range of experience. So thank you, Mr. Chairman. I appreciate you letting me come today.
You're most welcome. We have been happy to host you, and thank you for the presentation. And with that, it's 2:30 on the dot, so we need to cede this room to some other group. So thank you, and we're adjourned.